Most property investors have been told the same thing. Buy, hold, wait. But what if that model is actually costing you more than it's making you? In this video, I'm going to break down the real numbers behind buy and hold and show you what it's actually costing you every month and explain why the smartest property investors are doing something completely different. Buy property, hold it, wait for it to grow. That's the model most of us were taught. It's simple, it's safe, and for decades it worked well enough. But the market has fundamentally changed, and the model most investors are still following hasn't kept up. Here's what nobody talks about with buy and hold. Every single month you own a property, you're paying mortgage interest, insurance, rates, maintenance, property management fees, and covering vacancy gaps. These aren't occasional costs. They compound, month after month, year after year. And most investors have never actually sat down and added them all up. Most residential rentals yield somewhere between 3 and 5% gross. Once you subtract all those holding costs, you're down to 1 to 3% net, sometimes less. Meanwhile, your mortgage rate is probably 6, 7% or higher. So you're actually paying more to hold the property than it's returning in rent. That gap comes straight out of your pocket every single month. But the property will go up in value. Maybe. Over 10 to 20 years, probably. But you can't control when that happens, or by how much. And while you're waiting for capital gains to show up, those holding costs keep stacking. You're essentially betting your financial future on something you can't influence. That's not a strategy. That's speculation with a mortgage attached. Here's what buy and hold actually looks like for most people. You expect rent to cover the mortgage, but you're cash flow negative for years. You expect steady growth, but there are flat periods, corrections, and cycles. You expect passive income, but you're dealing with tenants, maintenance, and management. And the timeline? 10 years to financial freedom becomes 20 to 30 years, maybe. And here's the part that really stings. The opportunity cost. While your capital sits locked up in a property that's appreciating slowly, you can't use it for higher return opportunities. You can't access it without refinancing or selling. You're missing deals that could generate actual cash flow right now. Your equity is theoretical until you sell. The biggest cost of buy and hold isn't what you're spending. It's what you're not earning. So what's the alternative? Instead of waiting for the market to create value for you, you create value yourself. Buy below market through better sourcing. Add value through renovation and repositioning. Capture that value through a well-executed sale. Then recycle the capital into the next deal. This is property trading. And it puts you in control of the outcome rather than hoping the market does you a favor. When you compare the two side by side, the difference is clear. Buy and hold returns are market dependent. Trading returns come from value creation. Buy and hold takes years to decades. Trading works in months per project. Buy and hold often produces negative cash flow. Trading generates cash per deal. And with trading, you've got high control over the outcome, and your capital is constantly being recycled and compounding. Now, this isn't about never holding property. Holding has its place. When cash flow is genuinely positive, when you've got surplus capital you don't need to deploy, or as part of a broader strategy. The problem is when holding is your only tool, because if the only thing in your toolkit is wait, you're leaving a lot of money and time on the table. Here's the shift. The investors building real wealth from property aren't doing just one thing. They trade to generate cash, they hold to build long-term wealth, and they use systems to manage it all without burning out. Property is a business. The sooner you treat it like one, the sooner it starts delivering what you actually got into it for. If that shifted the way that you think about your property portfolio, and then you're ready to see what treating property like a business actually looks like in practice, check out the link below to take the next step.